On Wednesday, global oil prices hit a 10-week low. Today, oil continues its rally, supported by the data from the U.S. Energy Information Administration. The ruble is holding strong on high oil prices and expectations that the Bank of Russia will cut interest rates in June. Yesterday, Brent crude made several unsuccessful attempts to jump above the level of $36 per barrel. On Thursday, however, the bulls managed to push the price up in the morning trade. As a result, Brent futures for June climbed to $36.28. The price went up by almost 1.5% from yesterday's close. West Texas Intermediate crude also showed positive dynamics, having gained almost 2%. The American grade was trading at $34.11 per barrel. Oil quotes surged yesterday following the release of the U.S. crude stockpiles data. According to the U.S. Energy Department, oil inventories dropped by 5 million barrels last week, while the market expected to rise by 2.15 million barrels. The industry news has boosted investor sentiment. Oil storage facilities are being filled not as fast as expected. Meanwhile, a drop in oil production helps restore the supply-demand balance in the market. So crude prices are likely to continue the uptrend in the short term, especially now when the lockdown restrictions are being eased worldwide. Today, Brent is trying to settle above the resistance level near the mark of $36 per barrel. Yet it seems that the bullish momentum is not strong enough. In case the price advances to this level, its next target will become the mark of $40 per barrel. So far, there are no strong fundamental drivers for this move. Market participants have already priced in the possibility of interest rate reduction by 50-100 basis points, as the Central Bank of Russia is widely expected to cut the rates in June. Amid these expectations, investors become more willing to buy federal loan bonds. On Wednesday, Russia's Ministry of Finance held 3 successful auctions on debt securities, and last time such a successful auction placement was held a year ago, on May 15. A rise in demand for federal loan bonds boosted the ruble's growth. The Russian currency broke through the level of 72 against the US dollar in yesterday's session. Today, the greenback continues to extend its weakness, so the dollar-ruble pair edged down to the level of 70 rubles. This tendency may persist until the policy meeting of the Bank of Russia takes place in June. Still, the ruble is unlikely to show such a rapid growth in the nearest future. On Thursday, the dollar-ruble pair is expected to pull back to the level of 72. New escalation of tensions between China and the United States may worsen market sentiment. As for now, investors prefer to ignore this negative factor along with the possibility of the second coronavirus outbreak. That's all for now. We wish you profitable deals. See you on our channel in a couple of hours.